So this video is sponsored by Bityard, a crypto exchange with 9 out of 10 stars by the Coin Bureau guy, 400 cryptos to choose from their spot exchange, derivatives that include commodities, forex and traditional markets, as well as inverse perpetual coin futures, USDT perpetual futures and leveraged tokens. You can even set up a copy trading account so people can copy your trades, you earn commission on those trades, or you can follow other traders who have better results than you. Set an account up with a link in the description and get mystery box bonuses for completing random tasks. Bityard. Hello everybody, welcome back to Wrecked City, or I'm going to change the name now to the Commodity Click channel. Now, the reason we're looking at commodities, we're going to look at crude oil and natural gas very briefly, is because of the CPI report that came out yesterday. So we're basically trying to narrow down inflation, see if we can get a handle on what we think inflation is going to end up. Is it going to go down or is it going to continue to go up? And I think one of the main drivers to all of this is obviously fuel prices and food prices. So in a nutshell, the CPI obviously breaks down all kinds of factors, but I'd say the main driving factors is the fact that fuel prices are higher, extremely high, and food prices are also high. So in a nutshell, the more you pay for fuel and food, the less you have to spend on crap you don't need, like iPhones and Netflix, stuff like that. And so the stock market, effectively by default, gets hurt because the consumer is supposed to end up, resolving the issue in the end. They will always consume, they will continue to consume, but that's not the case. And to be honest with you, it doesn't even matter how much people consume anymore. The prices generally aren't really reflected currently on the markets because the markets have been pumped full of cash, free cash anyway. So they're coming back down to earth to start with, and then on top of that, the consumer has less money to actually inject themselves into the stock market, not in the form of actual investment, but I mean just literally spending. I haven't bought an iPhone, I don't intend on buying one, I don't even go for them. Sony phones for me. Sony phones are superior to iPhones anyway. I digress already. So what we're thinking about here is this is going to give us a clue as to what inflation figures will be in the future. So rather than sitting around waiting for a CPI report, we can navigate probably a good portion of that CPI report based on the direction of oil and natural gas. Now it's all about supply and demand. So TA will have an effect, but supply and demand is the main driver. So again, we're at the mercy of the situation over in Russia and Ukraine, and that also is going to be the situation for all the wheat, the corn, all the other stuff, and from what I understand, even the fertilizer. That fertilizers the vast majority of the world's crops. Big problems will occur the longer that situation drags on, and to be honest with you, it looks like it's probably going to drag on. To be honest with you, it looks like it's going to probably drag on, and that might be the intention at this stage, just to allow for a war of attrition to continue indefinitely. And so with that in mind, this chart was likely to remain high, which means inflation, although it can come down because the Fed have taken action and will continue to take action, inflation is likely to remain high for the foreseeable future, because oil at least is going to trade within this static, although it be volatile, range of about 75 to effectively 115. Now we are at the top of that range at the moment, and I do have a feeling that this is going to go into a bit of a blow off top kind of area, hitting this previous zone of around about 140, 150, and then get shorted back down. Now if we can hold above here, that's a problem, because obviously that means inflation is going to remain high and maybe even go higher. But if we break back down into this range, we will be fluctuating within this 75 to about 115 range. We do have bearish divergence on the weekly here. It's been going on for quite a while. Again, TA versus supply and demand. You have to work out that really TA does show something. It does give us clues as to what should happen, but the reality is we know why prices are high. We know why they're high. There is a requirement and a need for oil. The world stops without it. And to be honest with you, the demand is probably going to get higher again as China start coming out of their lockdown now. China being a major consumer, obviously, of oil, probably the world's biggest consumer, I would imagine. I couldn't be certain of that, but I would imagine it's one of the world's biggest, if not the biggest consumer of oil. They're about to come out of lockdown. So demand high, supply still remains relatively low, because we've cut off one of our arms basically to try to stammer the situation in Ukraine. It's it's more of a moral decision, if anything, because it's that by doing that, it's not really stopping Russia's selling their oil. Their oil prices remain high. There's plenty of demand for it. They've got all these other countries like India and basically a good portion of the population of the entire world, and China. They're all still latching onto that Russian booby, sucking that oil away. It doesn't really matter what Europe and America do. But anyway, that's not what we're really here to talk about. So effectively, the demand is still high and the supply is low, so it's going to cause and remain high, which means inflation is likely to remain high if you think about it in those terms. Now, natural gas, obviously, it's the summertime over here in England, and it lasts for about 45 minutes. But for the moment, it's quite warm, and so we don't really have the demand on natural gas that we would do later on in the year, where again we will need some of this, otherwise we will freeze. And that's just us. I suppose in England it's not as bad as Scotland or the Nordic countries where they are desperately needing to heat those homes. So we can look at this and go, Jesus, it's high. But the demand for natural gas is less at this time of year than it will be in let's just say 6 months from now, where it's going to be at its all-time high. And again, same situation, supply versus demand. The charts suggest continuation up. Supply suggest continuation up, and demand at the moment would suggest that this might have a small consolidation and then continue to go up. Supply versus demand, and again, we need more natural gas. Where are we going to get it from? Where is it? We can't get it. There's a problem. There's a big problem. So all of this is going to feed into inflation. So similar to, like I said, with food prices, so we're not going to chart that out. The TA can suggest one thing, which is we've got bearish divergence on a weekly here, all the way down. It's not really going to touch the sides. The best we can hope for is that we will remain in this channel between 75 to about 115, and that's where we're going to go. And natural gas, yeah, we can consolidate here, and just basing this on its previous TA here. At best, we could look for a consolidation over the summer months to this 21 exponential, the center of the Bollinger Band, or maybe the 50 exponential, either one of these, and then we basically end up bouncing from that, continuing to go and make new all-time highs over in the winter. And that's if the situation, the geopolitical situation remains the same as it is now. If for whatever reason we start to see things change, let's just say, I don't know, natural gas has a reason to come down, so let's just say more supply. Same with crude, more supply, which who knows? I know there's plenty of reserves in America, but whether or not they're going to open those refineries back up, I think it's very unlikely that they will, but they could if they wanted to, but I don't think that they will. We're going to see the situation continue this way, and it's only when something significant geopolitically gets done that we will see these prices go down. Otherwise, they're going to stay high and remain high. One other thing that could be done, which is possible, is that we see a blow off top, and then we see, similar to how we see things in crypto, as we're all aware of crypto, that shorts stack from extremely high levels, forcing price down. As far as futures contracts are concerned. Now, those sort of things have a less effect in traditional markets because the size of those contracts are enormous, and obviously they expire as well quite frequently. But it could happen, and that could drive the prices back down from a trader's perspective. I think it's less likely, but it could happen. So until further notice, we should expect at least oil to meander within this range, and natural gas to probably consolidate in the short term, and then probably launch again towards the third into the fourth quarter, unless of course something gets sorted out. So quick end on Bitcoin, because this is supposed to be about crypto. We are still within this range. We're still above the summer lows. So for the moment, everything's good. But we have tapped this support many times. We're about to break out of this apex towards the end of this descending triangle, which is a bit of a non-situation. Usually if you break out of here, you'd expect a fake out really, and then a back down, and then maybe probably at this stage now, as we are clearly in a bear market, we should expect lower prices. I can make a hopium video, I suppose, later on, maybe today or tomorrow. It's not so much about hopium, it's about targets, but just to quickly go through it today, we can recognize that we have bullish divergence on the money flow index here, which spotted a bottom within a 40% drop. Another one here, bullish divergence within a about 35% drop. We do have it here, low, higher low. This low is pretty pronounced, and so we can expect lower prices and still maintain the divergence. And the main key is this 200 simple moving average that's sitting currently around 22,000. That's where we have always found our lows, basically, in the last two bear markets. And we'll just go to the Bitstamp chart, just have a look at that. And again, yeah, this isn't hopium. This is actually the situation really that everybody's looking at, and this will be the case for all stocks. Any commodity, anything that approaches a 200 simple moving average is effectively a good buy. So all the way down from the bear market to bang 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 bang, reaccumulate down at those levels. Previous bear market, here we go, all the way up, bear market, all the way down, reaccumulate, bang 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 bang, and then continue up. So this is the eyes on the prize. So we've got the divergences on the weekly suggesting where the previous bottoms have been. We've got a target which is around 22,000 thereabouts at the moment. It's a weekly indicator, so it is moving up ever so slightly each week. And we've got one thing that we can think about. So the 4-year market cycle that everyone's usually quite privy to. We had our parabolic peak over here. This is our low. It took basically a full year from the top to the absolute bottom and the retrace. So we could consider 3 peaks here. This is the peak as far as volume is concerned. This is another peak, and this was the final peak. So depending on which way you choose to interpret this, we can go for the 4-year cycle peak, and we could measure this out, and we can think about how we're going to retrace and where we're going to go down to. Roughly a year's worth of price action, bringing us to around October, November. So September, October, November, we'll be looking to find a bottom if we measure this last peak. Now, I've made the case that this could be where the bear market began, because we also had many other indicators to suggest that that could be the blow off top. And if that was the case, we're already well overdue, which means that the low could already be in or is due to be put in sooner rather than later. So this is the Bitcoin peak, and the reason I say that is that if we think about it in terms of money flow index, there's one peak, there's another peak, and here is that peak that we referred to. So it's not the price peak, but it's certainly the volume peak, and it diminished ever since. Or you could think about the overall market with altcoins and market cap, which peaked over here. So this is the third peak, well, it's the second one, but done indifferently. So this is a price peak, this is a market cap peak, this is a volume peak. So let's have a think about this one. Where are we right now? All right, so we're still overdue, 427 days, which means that as far as the cycle is concerned, we could be looking at a low right now, overdue low. And if we do sweep down these lows, that could easily be the low. Either one that you look at, we're looking for the low to be put in this year, whether it's already, any moment now, or between September, October. Like I say, if you go by volume, it's this peak. If you go by market cap, it's this peak. If you go by price, it's this peak. So it doesn't really matter which way you cut it. There's 3 peaks of different entities, and we are looking for lows to be put in at any moment. So anyone who's looking to get in a position for Bitcoin, you'll be thinking of dollar cost averaging into it, really, because with every month that goes by, we might be slicing off new levels of support, but each one of these could very realistically be the absolute bottom, because we really don't know. If we go by volume, that's it. If we go by market cap, it's that. If we go by price, it's that, which means that we're overdue as far as these 2 cycles are concerned. We're overdue for the bottom to be put in, but if you're going by the 4-year market cycle, which a lot of people are still quite pleased with, and I suppose in hindsight, it has been the more accurate of all, despite having much lesser returns than expected. Then yeah, we're looking between now, September, October, to put that low in, and I would expect the low to be formed around that 200 simple moving average. Now there's one other thing that we could think about, and again this video has gone on quite long. If for whatever reason there's a huge capitulative event that takes place, like a black swan in all markets, that's going to be felt in crypto. That could easily drive us down below this level, a wick below this level. If that were to happen, what I would say is it would be similar to the March dip here, or similar to the housing market collapse, or similar to the whatever event that takes place in the world that causes huge sell-offs, emotional turmoil for people just sell those lows, which is basically what happens. Those lows are ridiculous lows, and if they were to happen, I wouldn't just be buying Bitcoin, I'd be buying all my favorites. Whatever your favorites are, if you think there's a good projection for those, you should be thinking about buying them, because that would be an irrational low, a low that's almost certainly going to mark a significant low in the market, and a low that should be bought up. And that would be the case for stocks and for crypto, and that's in many ways that would be the dream. This is the fairest price you can get for Bitcoin, the 200 exponential. That's the fairest price, about 22,000. That makes perfect sense. That would be the low as far as the TA standpoint. Anything lower than that, you'll have people saying, it's broken, it's going to zero, oh, the stock market's broken, we're going to be eating rice for the rest of our lives. But really, what it is that everybody's panicked because of the people that are talking like that, and they've sold everything, and they probably are eating rice from now on. But for us, we've been waiting for a situation like that. We should always have money on hand, because effectively that's the biggest sale that you'll ever get in not just crypto but stocks, the lot. Similar to this one over here. You know, that is, yeah, I remember this. And Matic was down at 0.7 of a cent. Harmony One was like 0.1 of a cent. You know, BNB was $6, Ethereum was $80. Look what happened thereafter. Now, I'm not expecting a turnaround that fast from a low that's significant, but if it were to happen, it would be one of those things that you look back and go, you know, I wish I wasn't so scared. You know, I wish I wasn't so scared. And that's what that would be the dream, really, is that we do have a capitulating event in the overall markets, causing Bitcoin and crypto to crunch down to those significant levels where we basically go, that's it, I'm going in. You know, maybe more in than I would have done if I'd have just naturally approached this level at a timely fashion. Right, so I'm going to leave it with you there. Hopefully that made sense. Quite a long video. Let me know what you think. And yeah, hope you have a nice day. Take it easy.